Hey everyone, welcome back to another video where I will be breaking down the Nasdaq trade that I took on Friday PM session in Nasdaq, and this trade is about how I captured 90 points in Nasdaq starting from 21,250 to 21,340. But most importantly, what I want to tell you is how ICT concepts sometimes are very faulty, and if you directly follow the rules, that the market has to come here in order for me to take the trade, you can actually be betrayed sometimes by the market. That can actually trigger some kind of desperation in you, and that affects your trade quality. How is that? I'm going to explain you in this particular video. So as you can see in this video right over here, you can see I have marked the 15-minute fair value gap. So this is a 15-minute time frame, by the way. I have marked the 15-minute fair value gap on which the market tapped. So basically yesterday Nasdaq already gave a great move. I would have taken the trade over here, but I forgot to set my limits. I actually did not see when market came here. It was very quick. I was watching some other pair. I was watching gold and US 100, US 30, and suddenly it tabbed and it just rushed off, and I couldn't take my entry in this particular position. That was my fault. Now, after that happened, market gave a clear break of structure on the upside. If you go on a 1 hour time frame, you can also see that it's a clear break of structure. That means that price is telling me that I am bullish. Okay, and if you take a look at the daily time frame over here, if you take a look at the daily, you will be able to understand that when price has not taken this drawn liquidity, when it has not taken that liquidity, it is not really telling me I want to go further down, right? It is getting rejected from this particular wick. So maybe it wants to take the liquidity on the upside, or maybe it wants to come all the way till this daily fair value gap. We can expect that. And what are the macro conditions? Tesla was up, and then Fed Barkins had some kind of interaction, and he said that the economy is actually looking better than whatever we have expected, and a soft landing might be on the cards. Anyways, these are all macro topics which I do not want to get into. But coming from a very technical point of view, on a technical point of view, you can see it tapped onto 15 minutes fair value gap post lunch. Okay, it was hovering over the 15 minutes fair value gap. What is very important is it respected the 50% of this fair value gap. That is very important. For any fair value gap to be respected, that fair value gap has to react from the 50% of that fair value gap. So if you take any kind of fair value gap, right? Let's say this is a fair value gap. Okay, so this 50% has to be held. If we are closing below this 50%, there is a high chance that we might actually not get respect, or not get the move that we are expecting from that particular fair value gap. What does price tell me over here? It gave me a clear break of structure. Wonderful. Number two is that it was hovering over the 50% mark of the 15-minute fair value gap, which is telling me that there is some kind of strength in the market for another up move. And the third thing is post lunch, right? Which is around 11:30 p.m. in India. The market was still holding up, which gave me the double confidence that okay, I can go long here. I went with a 1% risk with my stops below this particular candle low, because let's say if the market does something like this, market fails this particular thing, then I don't think that this fair value gap down over here, this will react, right? Because it is just a intuition that you get, right? That after the lunch, if it has failed, then there is a high chance that we might just consolidate, and given that it's a Friday, we might not see a big move. That is also very important. So as much as strategy is important, so are the other things. So is the macro, so is the timing, so is your own intuition as well. So this is where I took the trade on a 15-minute fair value gap. Why? Because I got a 1 hour break of structure, and there was a drawn liquidity over here. Okay, this was the nearest high that I could have targeted. This also was a high, but it would have been just 1:1. So I targeted for this, and I got a 1:2, and you can see the results in the Telegram I have posted. If you're unable to join the Telegram, from my description, check pinned comment, or just search Stoic Trader on Telegram, and you will be able to find my channel. This is how I made a 1:2 and close to 2% on my account that I am trading with Fivers. And this was the entire breakdown of the trade that I took. I hope this might have helped you in some other manner, or some way, to understand your trading in a better manner, or understand how I am actually getting the winning trades. I am feeling very great actually. I have been saying this for past few months. I know that the results haven't showed up till now, but it's just a matter of time. But my goal, as I told you, is just execution, right? To get those big payouts, I'm getting 400 $500 payouts, but to get those big payouts, you have to keep executing, you have to keep showing strength, you have to take the risk. So I have increased my risk percentage from 0.5 to 1% as well, and I will be a little more aggressive as well, but I will be trading quality setups. So this setup was one of them. So if you have learned anything from this particular setup, thank you so much, for watching. You can let me know what have you learned or what are your doubts, and yeah, I'll keep you guys updated. Thank you so much for watching till here. Bye bye, have a good day.